Welcome back to Bazaar Morning Call. Very interesting company now on our radar, Jupiter Wagons. If you just pull up the stock, just look at the phenomenal move the stock has seen. This year itself, the stock has jumped over 270%. And is the stock performance led by a financial performance or is there something else? The company also plans to raise equity funds. To understand more about the business prospects and the need for additional funds, we're joined by Vivek Lohia, the MD at Jupiter Wagons Group. Vivek, thanks a lot for joining in. And I'm sure you are as perplexed as investors to see the kind of move that the stock has seen in the recent past. So I just want to understand from you, in the last 2 to 3 years, has there been any change in your business drastically that has led to this kind of an up move? And what are the businesses that you are in currently? How do you compare yourself with peers like, say, a Titagar or a Texmaco?
Yeah, good morning. So definitely, this sector has been going through a huge tailwind, and we had seen it coming. So since this government has come to power, they were very focused on this sector, especially given the high logistics cost which the country currently has. We are typically, our logistics cost is close to 13%. And if we are going to be competitive globally, we need to bring it down considerably. And railway being the key driver, I think, towards this. So we were seeing a lot of investments in this sector, which was not visible, obviously, in the public domain. And which recently, you're now seeing I would say the offshoots of that. So we are a wagon manufacturing company, and wagon procurement is the last mile of the whole chain. So initially you have to set up the infrastructure, which I think the government has been doing a phenomenal job.
Got it. So can you put some numbers to this for us? The last time, the last I checked, you had an order of, you won orders of over 2,100 freight wagons worth 1,060 crores in Q1. What does it take your total order book to? And how much will you be executing, say, in the next 12 to 18 months?
So currently our order book is about 6,000 crores plus. So in terms of order books, we don't see any challenges because we are constantly adding new order books, both on the private sector itself. And now government has, what we can understand, has got big plans to procure further rolling stock. Anything between 40 to 55,000 is a number which we are aware of, and which is going to happen very shortly. So there is a lot of opportunity in this sector, and the private demand is also very strong. In terms of execution, currently we are doing about close to 600 wagons a month, and our target is by end of this year we are increasing our capacity to about 800, and we are doing substantial capex towards that, both on the wagon manufacturing as well as on the backward side of it. In terms of our foundry capacity, we are looking now on seriously to set up a wheel manufacturing facility with one of our global partners. So the idea is that by next year we should be in a position to manufacture about close to 1,000 wagons a month.
Okay, all right. Hi, Vivek. Big stock move is what you have seen, but that's what makes things even more interesting, right? Maybe the street knows something that we don't. So let's get some more clarity. You said your order book is around 6,000 crores. Break it up for us. How much of it is private? How much of it is from the Indian Railways?
So currently, most of our order book is private. I would say about close to 6% plus of the order book is private.
60%?
And over the last
60%.
1 year, that has been our focus because we saw a lot of opportunity in this space. Earlier, the private participation was much less, which is now growing considerably. And we are the front runners, I would say, in the private space.
Got it. All right. Let's get a few more details. You want to raise some money, right? Why do you want to do that? What's the quantum you're looking at? And could you tell us what is the need to raise money as of now? Because I'm looking at your interest payment is what, some 30 crores in the full financial year. So why do you require it?
Yeah. So as a company, we are a net debt-free company. So again, but then as I've told you, there's a lot of opportunity in the sector, and it's not that one is a core wagon manufacturing. Otherwise,
Okay.
we are also involved. We also have invested a lot in manufacturing of the brake systems, both
Okay.
for wagons as well as for coaches. We have very good global partners, companies like
Right. So
Daco, which are
Vivek, sorry to
yeah.
come in. Just so you're going to be raising money for the capex plans that you have. So could you tell us how much of money are you looking to raise? Point number one, and what is the ballpark capex plan that you have? We get both those two numbers.
Okay. So we are looking to raise anything close to between 500 to 600 crores. That's what our target is. And our capex ballpark plan over the next year or 2 years is about close to 1,000 odd crores of new capex, which we are planning to do over
Over the
the
next,
various verticals which we have. We have about 7, 8 verticals. So spread
right,
across the vertical is about 1,000 crores of new capex which we have planned.
right. Got that, Vivek. So yeah, all these right. The wagon business is the core business for you. You've got this JV. I think you've got two JVs for brake systems and railway crossings. Then you've got I think a tie-up with Rights for on the export front. You have some EV plants in the light commercial vehicle segment. So there are too many things. So which is will wagons be the predominant business for you, or in a way, do you have the right to win in any of the other segments as well? Just wanted to understand.
So yeah, so currently wagon definitely will be the predominant business, but I think going forward over the next year or 2 years, you will see the brake business being a critical driver to the growth. I think next year we should be doing a business of close to 1,000 odd crores on a brake side of our business, and there, as I've been consistently saying that because it's a more technology-oriented business, so the margins are also better. So that
Sure.
impact you will see on the core business also. Plus, I think EV is something which we are very excited about. We are launching our first commercial vehicle by beginning of next year. There we see a very good opportunity. Our focus is again on the last mile and the middle mile. So
Got it.
initially we are launching a vehicle with a 1-ton payload, and we want to take it up to all the way up to a 5-ton payload vehicle.
Okay, just a couple of questions. There are some concerns that investors have, and I'll address. I would like you to address it one by one. The promoter holding has come down. Earlier, I think in March, it was about 75%. Now it's come down to about 72.3%. What is the rationale behind it, and any further dilution in store?
So I think 72% itself is a very healthy promoter holding. So till about 2 years back, most of the growth happened aided organically through the cash flows which the company has. But now
Right.
we see a lot of opportunity in the sector, and there's a lot of tailwind. And the government is also very focused on this sector. So we want to encash on that opportunity. So
So you're not looking to bring it down anytime any further, right? I mean, it will stand at this level?
No, because in the current round of fundraising which we are going to do, there will be some dilution, but it will not be very substantial.
How
But
much
post
would it
that,
be?
I don't think I wouldn't know the exact number, but it will be, I think, close to about 3 to 4% maximum. So
Vivek.
beyond that, yeah.
Yeah. So basically, you're happy with your holding coming down maximum to around 68 to 69%. It won't fall below that.
Yeah. I don't think anything it'll go. Yeah, around 68% is what we are looking at.
Yeah.
Below that, I don't think
Vivek.
And if you look at our peers in the sector, our promoter holding is much, much healthier than that.
Vivek, during this conversation, numerous times you mentioned what a big opportunity is. That's why Sonia asked you, why did you even sell that 2%? A promoter would like to hold a larger chunk, right? But we get that rationale. Maybe taking some money off the table, there is going to be some dilution. So 68% we're okay with. But you also mentioned
because see,
something
the whole
cash.
idea is to grow the pie. So
Got it.
it's when there's a
We take your
opportunity in the
clarification.
sector, you need, yeah.
We take your clarification, Vivek. But what else has come to notice is your revenues has gone up very, very well. EBITDA number as well has gone up. But what the street tracks is cash flows from operations. That's not gone up proportionately. Are there plans to improve that from year on? Because that's a key matrix that we look at.
So, honestly, see, again, our business is a very cash flow generating business. So, but when the revenues go up substantially, what happens is that you get there's a lot of commitment towards the working capital, and that's what we are seeing because we have been adding quarter on quarter we have been adding substantial order books. So I think that will continue for in the next 3 quarters. But slowly now you will see that the cash flows are definitely improving, and I would say our cash flows are pretty healthy because our inventory levels. So our debtor levels are less than 1 month, and our inventory is also not. We don't. It's about
But,
a 3 to 4 month kind of an inventory cycle which we maintain.
But Vivek, your net debt has also gone up. I mean, if you map the last 4 years, right, there has been a substantial rise in debt as well. Is there more in store?
So, if you look at the debt numbers, there's no long-term debt. So, we are a long-term debt-free company. It's mainly towards working capital. And I think it's commensurate with if you see the revenue growth and if you look at the debt comparatively, again, the growth rate in the debt is much lower than the revenue numbers, the pace at which we are growing. And and that is again due to the strong cash flows which we generate in the business.
Vivek, let's wrap this up on a more growth aspect. So what are we? You said the brakes business will start to do well. It will generate 1,000 crores of revenues. You said next year, right? FY25.
Yes, that's what we are looking at.
So what is the what kind of numbers are you will you look at? I think you did about almost 2,100 crores on top line in FY23. What will be the number for F5? Let's talk about FY25. I mean, ballpark, given everything you're doing. Yeah.
So honestly, we generally don't give any forward-looking numbers. But as I've told you last year, if you look at the 2,100 revenue numbers, there on an average we supplied about close to 450 odd rail cars, which again, as I've told you, our target is to go to about close to 700 odd numbers. Again, we are adding new revenues from our brake business. Our other businesses also, the container business which we are in, that is also showing a lot of healthy growth. We are
can the number I mean again ballpark. I mean if you can help us, Vivek, what are we looking at? At least a doubling.
So something in those lines, definitely something in those lines is what we are targeting.
So at least a doubling of revenues by FY25. Because then you said that margins in the brake business are better than the regular. So there also there should be some improvement. Got that.
Vivek, just one more question. Your revenues are going to move up. The cash flows, as you promised, that's going to move up as well. Just a final couple of questions from my end. Normally investors like when the management, as their performance improves, they give out dividend as well. Last year, you gave out a small dividend. Will you all be putting a dividend policy in place? Point number one. And since you're looking to raise 500 to 600 crores, who are you going to give that money to? Do you have investor interest?
We have just announced our plans to raise money. So that is a work in progress in terms of, we do have a lot of investor interest which is there. So, but as I've told you, we've just announced, so we will work towards that. In terms of dividend, definitely the idea is that we are going to be very consistent with it. And we are definitely working on something like that. So ultimately, our whole idea is that we need to continuously reward our shareholders who have been with the company.
Sure. All right. Well, thanks a lot for addressing all the concerns that investors had as well as the potential, growth in the business. Appreciate your time here on CNBC TV18. Well, the TV18 editorial team does not engage in speculative or active trading in stock markets and follows its code of conduct on securities trading and investment. Any investor, viewer is advised to carry out your own necessary diligence or through a certified registered financial advisor for any investment decisions that you would have to make. But let's get back